Right, our job as we take you to lunchtime is to get you excited about the opportunity of blockchain DLT in the world of financial services, transforming the financial world for people, for business, communities, and the world, of course. And for that, we have four brilliant leaders in the world of blockchain in financial services. We have Kara from JP Morgan. We have Nishant from BlackRock. We have one of the leading entrepreneurs when it comes to digital assets and blockchain, Nick. And we have a real advocate for the people when it comes to blockchain, DLT, Dia, really, very well known in the market. So big welcome to. Now, my plan is to really just sit back and let these four really have a conversation. But I'll prompt them really because I'm going to be in your heads and think, what do you want to know? And allow them to have a conversation. But so you can get to know them a little bit more, our first question is really about, because these four leaders really are living blockchain now in their worlds. So Kara, how is blockchain part of your world at the moment in a couple of minutes?
Sure, thank you. So yeah, nice to meet everyone. Cara Kennedy, I head up digital asset product for what's termed our security services business within JP Morgan. And that essentially is the part of our business where we safekeep and service assets for large institutional clients. So it's one part of our organization, which is obviously a very large financial services organization, which spans banking and asset management and a number of other areas. And at JP Morgan, we've been invested in blockchain for over 10 years now. We initially set up a center of excellence in this space back in 2015 when it was very nascent. And it has grown and grown, and that investment has continued. And we now operate a dedicated business called Connexus, which is really focused around delivering blockchain-based solutions across the entire firm, based on what we hear from clients, but also where we see opportunities to leverage that technology, whether to bring efficiencies or net new functionality, and ultimately to kind of move forward the industry in terms of record keeping and ownership transfers. There's a number of different applications that we see there. So we have that kind of dedicated business line where we focus on those solutions. But my role within a more traditional business line is to really look at how the changes that we're seeing in the adoption of this technology will impact on how we serve our clients in terms of the BAU. So we kind of have the innovation side as well as then looking at the impact and opportunities on the more traditional businesses. And I have peers that sit within our markets, kind of capital markets businesses, within our asset management businesses who are doing the same thing within their area. So it's really almost a network effect in itself of looking at how we explore this technology. And so, for me, the reason that I'm passionate about this area is that, my background is financial market infrastructure, security settlement, which is the very boring stuff that happens, once people trade an asset. How do you record keep the ownership, the entitlements, the transfers of that asset under the bonnet? And the existing infrastructure is very much built around centralized, highly regulated entities that maintain those records. And that has served us very well for over, actually for much longer than a century, but, within the current construct, much of that is based on technology and regulation that has been developed for and used for decades. But this transformation provides an opportunity to look at doing that completely differently. And I see that as like a generational shift. Just as we move from certificated ownership records, back in the day, we still have vaults where we hold physical certificates, so that hasn't entirely gone away. But that then moved to electronic record keeping within these centralized entities. I do think this provides an opportunity to move us to the next paradigm, which is decentralized record keeping, much more, as we heard in the last panel, personal control over the records and perhaps the ownership itself. And the service model around that for institutions like ours will adapt and change, and there's opportunities there as well. So that's really how I look at it.
More centralization in other ways, and you see this outbreak, I would call it, of Bitcoin treasury companies, terrifying $750 million one reversing into a SPAC yesterday. Doesn't smell good for the for how things are playing out, or for decentralization. So yeah, it's been an amazing, it's been a fascinating journey to have been part of. I mean, the underlying principles of it, 9 to 12 million crypto holders in the UK now alone. UK is the fourth biggest crypto, probably the third or fourth biggest crypto economy in the world. The FCA has just created a pathway for kind of authorized retail and institutional adoption, which gives us the chance to potentially have a Brexit benefit at last, which would be nice. We might actually get one if we can set ourselves up as a real hub for digital assets out with the very cumbersome European framework that's in place. So it's kind of it's an ever changing journey. But the I think the thing for people to grasp is that it's almost like it's kind of an unstoppable. The boulder went over the hill a while ago, and whatever happens, reputationally, and a scandal here, or meme coins, or whatever it is that's going to pull this current crypto cycle down, whether it's Bitcoin treasury SPACs or meme coins or Trump or whatever it is that's going to kill this particular cycle, the overall trajectory is this is where we're moving, and it comes down to the core tenet of people wanting to own the assets on a human basis.
Right, Nick. Well, we'll come back to that point about the journey, really, and maybe people here will want to know about how they become part of that journey if they're not at the moment. But let's just, Dia, really, well, in terms of that, if I may sort of say, the voice of the people, how? Because if you think actually in the world out there, the big world, AI, robotics, and even quantum are seen as the sexy areas. Very little real media coverage, in truth, about blockchain. But you see things very differently to that.
I do, and might sound a bit provocative, but I think from a consumer perspective, they don't really care about the underlying technology. So when you're building something, and when you're a user of something, all the user really cares: am I getting my service or my product better, faster, cheaper? And people who are excluded from financial services would like to be included, right? So when I think about it, my background, I've worked in financial services over 20 years. I also worked for JP Morgan for a while in Singapore. My last role was with Phoenix Group, where I had strategy and proposition for 9 million customers and 200 billion in assets. And one of the things that I would think about is the tooling aspect of it, right? What's the right kind of tooling to be able to deliver that good service, right, to our customers? And now that I'm working on an exciting AI project, again, to help demystify financial services to women, I kind of think about, again, tooling. And all these questions come back to, where do you use blockchain effectively, right? What is the right use case for it? And though I know we are talking less about pilots and more about how do we put something into mainstream adoption, I think one of the things which really got me excited was the SWIFT pilot, okay? Because if I think about payments today, 80% of the world's payments are still done by SWIFT, okay?
Yeah.
So we're talking about 11,500 financial institutions globally, 200 countries, right? When they do a pilot, okay, and a successful pilot at that for CBDC integration, okay, to me, that is technology, transformation at a global scale, right? So they did something very, very successfully with the CBDC, embedding it for France, for, I think, Singapore and Germany. And the results were staggering, right? Costs go down 80%, speed 67%, okay? Near zero fraud. We talked about fraud a fair bit earlier on. Now, all these things go back to the consumer perspective: faster, cheaper, better. So these things to me matter, all right, being the voice of the customer, as you coined me as. And I think I would like to see more of this happen. And when someone like Swift does it, when JP Morgan does it, when BlackRock does it, it's no longer tertiary, right? It's mainstream. And we need more of this. So yeah, I'm excited to be here.
Right, that's a terrific example there, really. And it really does sort of bring it alive where it does touch everybody's lives, really, one way or the other. So let's move on then. Let's think about, right, so we're on this journey, but as with any journey, there's going to be some challenges. So if there's a particular challenge that we need to unblock sooner rather than later, what would that be? Do you want to go first, Cara? It doesn't have to be necessarily JP Morgan related challenge, but what would actually help the acceleration of the...
Yeah, so I think one of the biggest challenges here is around the adoption and scalability, and we're at that kind of juxtaposition now, I think, where we've seen, particularly in our industry in financial services, lots of proof of concepts, lots of small scale workflow type arrangements, as we mentioned, that where you're taking a selected group and you're bringing them together to demonstrate the value proposition. And that's great, and it's part of the journey. But what we need to do now, for me, I think the biggest challenge is to accelerate the adoption and start to embed these within not just the proof of concepts with these big firms, but how do we make this part of the mainstream product? And I think there's a few challenges to that I see. I think or things that we can do to help accelerate that. I think education is a big part of that, and that's, you know, in a firm like ours, that's educating not just the business owners in terms of where the opportunities are, but also the control partners, the regulators, you know, everyone who has to be bought into not just the value of the end solution to the client, but also how we're doing this and how the technology can enable this to be done in a properly controlled manner. So I think education's one. I think standards is another one. I think it was mentioned in one of the other discussions as well that, you know, as an industry, particularly an industry that's as highly regulated as financial services, you know, making sure that we're all working on the same terminology, we're, you know, adopting standards or even transferring standards that have been built into protocols like Swift today are widely adopted. We don't need to reinvent the wheel, but how do we all agree that when we go into this next phase, you know, this is what the smart contract will look like, and we kind of agree that those parameters are accepted across the industry. That's really easy to say, and it's very difficult to do given the complexity of different, you know, geographic, jurisdictions with different regulatory frameworks and different actors. So, you know, that's the kind of two areas that I would see as critical to help us start to accelerate that adoption.
Okay, thanks, Cara. Nick, let me come to you really in terms of your entrepreneurial business, and you're mainly B2B. Is there particular challenges there in working with larger enterprises, or is it actually more of a broader sort of challenge?
Frameworks are in place. Frameworks are coming, which is good. The frameworks, as Cara mentioned, look like frameworks in the traditional financial services sector. So, you know, a firm that wants to offer a crypto as a service product, so that you know, a firm doesn't have to go through its own authorization, will follow a pattern that's very like the current e-money piece. If you want to do custody, you have to have prudential requirement in place. So, you know, there's a lot of good things coming. The UK barrier has been some really good movement. We wait with bated breath on the mansion hat on Rachel Reeves's speech to see what's next, to see how quickly we can start going. I think that message, which has been kind of delivered consistently from the industry, is this looks good, but can we go faster? It is really important. And then, you know, the other thing from a kind of cyclical point of view is, you know, you kind of think, well, what's next? What's the kind of ticking time bomb in this cycle, in this kind of adoption cycle? And, you know, you like to think that some unanimity around things like AML, the really important stuff, AML, KYC, all of that fun stuff, and the fact that regulators are now taking interest in how firms run their businesses, you like to think you're kind of through the bad actor phase reputationally. But we've seen, we have seen big institutions come towards blockchain and then pull away again in times in where the industry is seen as being kind of a bad place to be. Can't use the word blockchain anymore. You've got to call it something else. For a couple of years, and then everyone likes it again because Bitcoin's up. So, and there, that reputationally, that's an interesting thing to navigate. And the fact that Deer's quite rightly said that nobody gives a monkeys about the underlying technology from an end customer point of view does it work better? It is fascinating to me at the moment as we started with a retail a non-custodial wallet product with Exchange with the goal that we wanted to open it up to demystify it and make it easy for users to access DeFi and all this other cool stuff that was there on Web3. We're a bit early, but you can actually see that reality beginning to happen now.
Okay.
There's some really interesting stuff where you might be able to, sorry guys, but you may not be able to have a bank. You may not need a bank to bank with. You might be able to decide that you can have something to take money out of a cash machine with and pay, but you have all your funds in a digital asset because actually you can stake and get 10% interest on it, not 8% or whatever your bank account. And that reality is there. 7 years ago, it wasn't. Now it is. So there's a mixture of kind of structural integrity, volume, the number of holders, value of the market, fact that we are and then US, that everything's still global economy wise is still so influenced by what happens in the US. We've probably got the most crypto friendly at the moment regime, that's existed anywhere. Rights or wrongs are to be debated on another format in terms of personal involvement and exposure, but it's a massive window for the industry, and you can see large institutions jumping through that window at the moment and creating all sorts of products.
Yeah, and that big date of the UK government chancellor Mansion House speech, 15th of July, just a couple of weeks away before we may hear some really interesting things. Nishant, would you say, therefore, is regulation one of your barriers to that adoption since you've been into that 3-year execution of the role?
I mean, to his point, definitely the Genius Act that has come out in US is something that we are very excited about around stable coins. The idea that it will build a lot of consumer confidence. There are reserve requirements, there's a licensing requirement. Tech firms can't jump in, right? So all the things that we will love to hear. And I think this is, to the original question of challenge versus opportunities, this is a word of optimism right now around what this can build for us. So as I said, the biggest opportunity that we are looking at is how do we bring the traditional finance, if we can call it TradFi, and these new digital asset classes together and make it convenient for traditional investors and our moms and dads and grandfathers and grandparents to feel confident in investing in these digital assets by introducing wrappers around these asset classes that make it very safe and transparent in terms of what's happening. Similarly, for the newer generation, for the people who are more digital natives and comfortable in dealing with these securities, how can you expose them to the world of traditional investing and asset classes? I think that's a very big opportunity. The other piece is, again, to your point around the ups and downs of various technologies. I think this is a word where you need to combine technologies, combine strategies, combine platforms, and somehow I feel DLT has to ride the AI wave here. There is so much of conversation about agentic AI right now. Every firm is focused on agentic AI.
Yeah.
And we need to make sure DLT doesn't lose the conversation over there. That's a challenge, that's an opportunity, and that's what we are focused upon.
Yeah, I think that's a great point, Shannon. I certainly believe that's a real sort of sense in a way to make sure it doesn't, its purpose actually has a key role as part of the technology infrastructure for a future society and economy. But on that sort of, Dia, Do you sense is there a change in appetite because of maybe younger generations' experiences of, say, digital assets around some of this technology, or interested to know more, or is it really they're just, as you said before, want to see the outcomes?
I think outcomes are important across, right? So whether you're, irrespective of how old you are, you're still looking for that cheaper, faster, better. There's no denying that. But yes, digitally native generations are more open to adopting newer technologies. But again, are they adopting a technology, or are they adopting a service which is better, faster, cheaper? And I think, there are two things. I think we, earlier on, I think Chris was talking about self-sovereign digital identity, right? That matters to people more and more. Today, we think about privacy. We think about data being mined. We are more cautious about accepting all cookies, okay? And that's come with a cost, right? Okay, because you open the newspaper and you see a data breach, and you're kind of thinking, how do I protect myself from it, right? And the second bit is the inclusion bit. And I think, Nishant, you were talking about how at the end of the day, can we get more people to invest in these digital assets? And I think there's huge power in that. Like if we look at the US, right, capital market participation is around 67%, okay? You look at the UK, the best stats I've ever seen is about 27 to 30%. In reality, about 18% of British males have stocks and shares ISA, okay? Junior ISA, okay, well done to you as a parent if you set one up. But 80% of those flows are in cash ISAs, okay? What does that tell us? That tells us that people are terrified of investing, okay? And then you look at access. You want to, you might think an office is a good investment where JP Morgan houses their employees. But I, as an individual investor, can't get access. But that's where tokenization comes really interesting. Can we democratize access? So I think from a consumer perspective, right, we as financial services, as regulators, as a government, we have a role to play, right? And I think, Nick, you talked about, you alluded to how are banks responding to, for instance, new technologies. If I look at value has left the banking sector. I started my career 20 years ago, right? Value is constantly leaving banking sector, okay? I mean, name it, right? Banks used to lend money, even that private credit is going to dwarf what banks can do. So you look at asset management, you look at trading, all these have left. Globally, banks are trading, about 50% of the banks trade below book, right? Now, these are really important things. So I think when we design the new financial services infrastructure, we need to ask ourselves, what roles do banks play here? Okay. Where is the citizen in all of this? They should be right in the center of it. And how do we create products and services, right from identity systems to accessing products in a simpler way? And I think blockchain has a huge role to play in that as part of the tooling kit, as does AI. And I think Nishant, you mentioned that.
Yeah, absolutely. They're great sort of points. Right, because of time, I'm going to change the tact a little bit. And I'm thinking of our wonderful audience here, all of them, some of whom have already started to develop their careers in the exciting world of financial services and the role of technology, fintech. Therefore, thinking of your younger self and knowing what you know now, what would your advice be?
Younger self.
I'll start with Nishant, really. Think of it, what would your advice be in terms of, someone who's really interested in the world of finance, sees the role of new technology in terms of getting that foothold and getting those opportunities there are in this sort of fields?
I think my advice to a younger myself is it's no longer about the technology. It's about the outcome, the right use case. What problem are you trying to solve? I think many times as technologists, we try to jump in and I see it with agentic AI as well. Everybody wants to apply agentic AI somewhere, right? Is it really the right tool for the problem that you are trying to solve? That's very, very important. So somebody mentioned in the panel before, it's about critical thinking. How do you get into that mindset of not learning to code various languages, but how do you think about a problem? How do you shape a solution? The second bigger piece is how do you collaborate with people? That is becoming more and more difficult. some of the conversations in the first half of the morning made me think that if we look towards East, countries like Singapore, Hong Kong, India, they are jumping the innovation here. Are we learning enough from them? This whole concept of being an Indian, I proudly talk about India Tech Stack, which is basically a centralized metadata of your identity. APIs are available. Any fintech firm wants to come in, build a solution. You get access to the database, provided the consumer has agreed, and you don't have to rebuild solutions around AML, KYC, authentication, and things like that. That is really hyper-scaled innovation. So how do you think about problem solving? How do you work with others? How do you learn from others? And then how do you stay humble? I think that's also very, very important. And those are the three things I will sort of teach myself to.
Great guys, listen. Kara, to your younger self.
I think, when I think about the dynamics that are at play at the moment, it's really interesting hearing the conversation from the consumer perspective, because I think what's really unique now is that you have the functional developments occurring mainly in the consumer space, and then the work is then trying to apply those upwards to the institutional space, which is, it's not the first time that's happened, but it's just an interesting dynamic. It's not that we're creating these products between the big businesses and then downstreaming them. It's very much the other way. So I think recognizing the value of the knowledge you have from the domain of the consumer, particularly when it relates to digital assets or blockchain technology, learning that's something you have potentially over and above those who are working at the institutional level, to challenge how things are done today, right? Because that's the biggest part of my role is trying to convince that the way we've always done it doesn't need to be the way that we continue to do it. And so having that confidence and being able to articulate that is important. But then on the flip side, having the humility to understand that there are areas about why we do things the way we do, and particularly thinking about some of the real challenges around the adoption of public blockchain technology within a space like financial services, things like privacy. We've talked about the challenges around identity and the importance of that for AML, KYC. We've also got to be open-minded about how we solve those challenges, because it's going to be those areas that really drive us forward. So I think it's that kind of balance of having the confidence to bring that new knowledge, and then also recognizing that there's things that need to be learned from the past too.
Really insightful. Yeah, and take that real world you're living in and bring it in and see how it could be applied. Yeah, excellent. Nick, your younger self, before you stepped into those entrepreneurial shoes that you wear 24 hours a day, what advice to the entrepreneurs here would you give about developing?
Yeah, get a normal job. No. It's an interesting one. So I have been, I did a history degree at the University of Glasgow. No idea what I wanted to do. I was given good careers advice to just enjoy most Jones who never concentrate on anything. And I kind of hit my nose on that through my career. I was lucky I got a job with one of the early successful post.com bubble bursting companies in London in 2000, which was acquired by Yahoo in 2004, when Yahoo was still the biggest internet company in the world. That's funny to hear now, isn't it? 16,000 employees, headquarters in Silicon Valley and all that stuff. And then I've had a succession of my own businesses in kind of emerging areas. So very early in mobile, very early in what used to be called big data, and then machine learning before everyone decided it was AI, which really isn't. I worked in that space as well. So I've worked and at the kind of, despite not being a technologist from a kind of disciplinary point of view, I've worked right at the edge, right as things are either starting to be adopted or before they're going to be adopted. And probably my advice would be just be really they're all worthwhile. You can go early, you can go mid-cycle, you can go late, but really, really understand where the technology is in the cycle and grow your business and think about how your business works and how it's going to work proportionately. And actually, if I look back on Zumo with with the kind of marking my own homework lens, we shouldn't have bothered embracing regulation early. We should have gone much harder into the decentralization space and built a business out with the regulatory rules, and then done what the Binances and Coinbases of this world have done, and then hire loads of lawyers to make you compliant when you're big enough that you've got enough money and it doesn't matter anyway. That's what that's ultimately what I would have done, and paid for enough access to politicians and regulators that you kind of get in anyway. That's what I would have done differently, and that's probably from a misunderstanding of where we were on the blockchain life cycle. Overexcited in 2018, thinking it's going to change the world. The reality is, we were an ICO scandal and an FTX and a Celsius created crypto winter ahead of any kind of real mainstream adoption. And yes, no one has a crystal ball, but really kind of understand. If I go back to that goto.com overture piece, the dot-com bubble had burst. It had washed out all the crap, pardon my French, all the real rubbish had been washed out. Broadband speeds would begin, internet speeds would begin to pick up. You didn't have your credit card details stolen every time you went online, and it was just right. It was just the right timing, and the business grew very, very, very easily. So I think be aware if you are on the adoption cycle, and be realistic. Build the business that's right for the stage, the stage of the cycle, and then don't be afraid to get out money around on the table to do so. That's my other one. No, you can hang around too long.
Perfect advice, and you've got the bruises and scars to show.
Yeah, of course. Yeah, I mean, it's fascinating, and there's a massive 2025 trend at the moment. You're seeing businesses being built using AI. Getting to 10, 20 people and taking £100 million exits. I mean, if you can do that in 2 years, 5 times, I would do that all day long rather than. I'm talking to regulators for 8 years. I think that's the thing. Just be aware of the times, right? What's fundable, what isn't.
Great advice, super advice. And Dia, really, there have been many here, your words will resonate with about that, thinking about the consumer. But any advice to those wanting to step into that career where they see that the application could be applied?
So I think when there's. If we look at the stakeholders in society, right, you have the citizen, you have the corporate, you have governments, right? And the magic happens in the intersection of all three. So I think if you are a blockchain evangelist, I would say don't fear the hybrid path, okay? Because, for instance, go back to the Swift example, one might say that is not true decentralization, okay? Because you're still using the Swift messaging at the back of it. But what you're doing is you're using a hybrid model because having done technology transformation programs a few times in large organizations, I can tell you, for lack of a better expression, it's character building. It's very, very hard for large organizations to uproot their technology stack, which is dated to begin with, okay? So think about the end goal. If the end goal is adoption, and it might not be a clean line of completely being decentralized, accept it and move on with it. Because when organizations like Swift do something, it impacts more people. The other thing is for regulators, I would say, and for corporates, I would say technology will always outpace regulation. It's happened in the past. It will continue happening. And the reason being is because you need to have something in full-fledged operation to be able to govern it, right? So it only makes sense. For instance, I think Modular is a company in Edinburgh, and they very, very successfully money company. But this was before they operated outside the remit, and now they've got the proper rigor and governance around it. So there will always be regulation which would come after, right? And from a citizen's perspective, I think don't stop demanding, right? When I started my career in financial services, the technology stack was two-tier, okay? So right at the bottom, you had the Swift, the London Stock Exchange, Origo, all these providers, right? Your infrastructure. And above that was the product providers. So you had the banks writing the loans, and those were the days when banks did do that. And, the asset managers created investment products. And that was it, really. And then, almost like 12, I would say about 15 years ago, you had intelligent digital services. And then came along the Wise and the Revolutes and all these interesting companies using the same infrastructure, the same products, but creating better consumer experience. And right on top, you have the big tech, right? Now, if you look at adoption, you will see adoption always happens the first 2 levels faster. But what I find really interesting, like even for JP Morgan for that matter, when a JP Morgan launches a JPM coin, or when Goldman Sachs does the custody services for digital assets, the earlier adopters are not the 1.4 billion people who's been has been somewhat excluded. The early adopters are people who are mainstream because they also want the cheaper, better, faster.
Yeah.
And ultimately, all these technologies will allow people who didn't have a digital identity before have one. And I think, Nishant, you talked about in Asia how people actually adopted these technologies because the traditional infrastructure wasn't there. So I think the magic happens in the intersection of these three. And I guess all I would say is, continue doing the great work that you're doing and keep challenging the status quo.
Yeah. Well, I would love to carry on the conversation for another few hours with you, with our wonderful sort of panel, but I know lunch is awaiting. I can hear a few tummies rumbling. But will you join me in saying a big thank you to Kara, Dia, Nishant,